All right, welcome to today's client support webinar. Hope everybody's doing good out there. And by the way, happy holidays. Hope everybody's having a good one so far. Unbelievable how fast time travels, right? All right, so I assume everybody can hear me okay. Let me know if the audio goes bad. For fun, I'll cut my webcam on and we'll see if that works. If that slows things down, you guys let me know, okay? And we'll take it from there. Okay, so Jean, before I get going, do you have anything you want to announce here?
Just want to say happy holidays and welcome everyone, and back to you, Ben.
Oh boy, that was quick. Okay. All right, don't forget Stock Analysis Friday too is this Friday. We're going to be holding that every Friday, unless it falls on a holiday, of course, but that's coming up as well. All right, so let me get going here. I want to talk about risk control today and how to use the risk to reward calculator a little bit. I think it's time to go over that again. And of course, if you have any questions, feel free to chime in. All right, first thing to talk about are the risks involved in trading. There are risks in trading the financial markets, and you need to be aware of that. First way to control it is, of course, through using money you can afford to trade with, called risk capital. The second way is what we're going to talk about today, by controlling your trade risk, which really amounts to knowing where to put your stop and knowing how to calculate your trade size, also known in the industry as your position size. So we're going to go over that and the variables needed in order to perform that calculation. Also, too, if we look up any stocks, please run those by your financial advisor, because we don't know your personal situation and they do, and they can advise you whether a situation or stock that we talk about is appropriate for you. And then finally, realize we deal in a realm of probability, so we're not always right. We just want to be right more often than not. So that is, again, why risk control is so very, very important, is to control those losing trades as much as possible. And you can do everything right with your trading rules and even end up in a losing trade. So that is why it's a realm of probabilities, right? And past performance does not guarantee future performance as well. All right, many books can help you with that. Most of you that are here today, we've got a good turnout, probably have most of our books because you're current clients. So my new book, The Art of Trading, is coming out in pretty soon in 2024. And then also the books on money management, and this is kind of what we're going to go over a little bit. There's a segment in each one of these books on the trade risk to reward calculator. And if you want more details on what I'm telling you today, those are the two great books to go to. And then finally, of course, we have software, and our software works on NinjaTrader, TradeStation, eSignal, MT4, and MT5. And it also is available on multi-chart. So those are the platforms that our software gets installed in and gets plugged into. Now, when you buy our software, it includes 30 days of a service we call Platinum Care. How many of you are out there are familiar with Platinum Care? Just give me a yes, no in the questions area. Okay, quite a few. All right, so Platinum Care is a service that we have that offers remote services. Now, a little bit of explanation on that. So when you buy software from us, it's going to include 30 days of platinum care because we want to get you set up, right? If you want to switch a platform during those 30 days, you can, all right? So that's what the 30 days is, for you to find the best platform to use if you're not using one already, and for us to do the heavy lifting of installing it for you. After 30 days, all right, then you have to pay for the service if you want it again. So if your computer crashes and you need us to come on and reinstall it for you, we can do that, but you do have to pay for it. And the service you would pay for is called Platinum Software Care, and that's in our shopping cart. So you can buy that at any time. Or let's say you bought the ART software, your computer crashes and you were thinking about getting the OWL, you might as well get the OWL or one of the other indicators or scanners or whatever, because that's going to include, all right, platinum care. All right, so you kill two birds with one stone, so to speak. So I just thought I'd mention that to you. And of course, our software can be bought a la carte as well. All right, so let's talk a little bit about risk control today. And again, if you have any questions, feel free to run in. This is TradeStation, so if you have any questions on TradeStation, that's a very popular platform these days for us. You know, it's really looking pretty good. Okay, so I want to just take an example here. Somebody give me a stock up there to look at. Just type in a stock. That way I know it's one that you're actually interested in. So give me a stock up there to type in. Going once, going twice. Nobody? Oh, okay, here's one. Okay, AMAT, good old Applied Materials, right? All right, so let's say, you know, I'm just going to pick a pyramid here, and it could be a daily chart or whatnot. So let's say you were considering, I'm just going to isolate one pyramid for this example, because it really doesn't matter what it is, okay? So let's say we have Applied Materials and it's generating a bullish pyramid, just like this. All right, if you're familiar with how we do things here, then the entrance is going to be when prices exceed the top by one tick. The stop is going to be set usually one tick below the base leg, and that can vary from markets to markets depending on what you think is appropriate for putting a stop at under a support level. For example, you know, if you're day trading some futures markets, sometimes we give it more than a tick. All right, so that depends on liquidity and so forth. But for today's example, we'll consider it one tick under. So let's talk a little bit about what's going on here. So the pyramid in itself identified a trend trading pattern. And that trend trading pattern is basically higher highs, right? And higher lows. So here's high one, and here's the low, way down here at the bottom, okay? So you definitely have higher highs and higher lows and higher highs, right? So that is, by definition, what an uptrend is. So that pyramid solves the definition of an uptrend. The next thing it's taking a look at is the momentum on the left-hand side as opposed to the right side, and then again here. So it's going to draw high probability trend trading price pattern entries and exits. And so the point I'm trying to make on this is that the base leg is always attached at the bottom of a pullback in the formation of the pyramid. So remember when I said, you know, when we talk about risk control and controlling trade risk, you have to know where you're going to get out of the market in order to perform the calculations. And so the pyramids tell you that based on the pattern. And so it's going to be one tick below that. We know our entry is going to be up here, right? So if you see a pyramid that's forming, let's say it's a yellow colored pyramid, and prices have not yet gone above the apex, then that gives you a little time to prepare for the trade. And by preparing, I mean it gives you time to do the calculations on the trade size. So the first thing we want to do is, of course, bring up the trade size calculator. There it is right there, right? Okay, so there it is, and set it up properly. So you want to do this before you even start trading or getting ready to enter. So put your account size in, whatever it is, under the account size. Okay, that's step one. Then put your percent risk in. Now, as a general rule of thumb, I recommend using 2%, but if you're using the trader's assistant and you have enough trades in it, like 30 to 50 trades already entered in it that are closed, so those are closed trades, then you can actually have the trader's assistant tell you, based on your performance, what percent risk to use in the calculator, all right? If you don't know, I recommend starting out with at least no more than 2%, all right? So if you have really good closed results, the trader's assistant is probably going to tell you to use a higher amount than 2% because you can based on your results. Poor results will be even maybe lower than 2%. But 2% is a good rule of thumb. So that means that you don't want to lose any more than 2% of your account value, okay? So that's really important, okay? So, you know, again, what's 2% of $1,000, of 100,000, okay? So if you have $100,000, and I'm gonna wait for you guys to tell me, 0.02, what is that? Pretty easy, right? 2,000 bucks, right? Okay, so you don't want to lose any more than $2,000. Now, that is not saying in this case that when you buy a stock outright, you're only buying $2,000 worth of the stock. That's not what that's saying. That's saying if you are stopped out, you're not going to lose more than 2,000. All right, that's a big difference. Okay, so that you need to be aware of, all right? Now, if you're buying an option, there's a couple ways you can do that. If you know 2% of your $100,000 account is 2,000 bucks and you just want to keep it simple, don't buy more than 2% or $2,000 of an option. That way, if it expires worthless, the most you lose is $2,000, which is an acceptable 2% loss for you, okay? So that's a very simple way of doing this. But when you're doing the underlying asset, we can do it a little different. All right, so that is important. Now, the entry price, that's going to be one tick above the high of the point or apex of the pyramid. The exit price is going to be one tick, usually, below the support, okay? So those figures are entered in here in the calculator. That's the nice thing about the pyramids, is they give you that information. And then, of course, the point value. Now, when we're dealing with stocks, the point value is always going to be 1, okay, whether it is an ETF or a regular stock. And then you can put your commission in, whatever it is, all right, and then also put your margin in, all right? So let's say we have a brokerage account where we have, they're loaning us 50%, so it's a margin account, 50% margin account. So you want to put in 100. If it's an all cash account, what you'd want to put in here is, instead of 150, you'd want to put in just 100 for all cash. Okay, so either way, depending on how you want to do that. Now, if you have a 30% margin account, then you put 130. Okay, so you get the idea. All right, so the next thing to do, and I'm just going to have that risk to reward disappear for a minute. The next thing to do is bring up your data box, okay? And so while you're getting ready for the trade, you put your mouse right over the price bar representing the entry or the top part or point, also known as the apex of the pyramid. And so in this case, it's 125.81. So one tick over that is 125.82. You do want prices to get over it, not just meet the high. So you always want to have it at least one tick above the point of the pyramid, okay? And then therefore also the low, which is represented by the support pullback here, all right, is going to be 120.18. So that is going to be 120.17. That's going to be your exit, right? So if we go back to the trade size calculator here, All right, now we can put these values in. So the entry we said was 125.82, right? And the exit was 120.17. All right, now, all right, we can calculate our trade size. And so it tells us on this that it's 353 shares that we can trade. And if we get stopped out, we're going to lose $1,994.45. So under the 2%. The cost of the trade for this is $44,414. So a lot of people get confused when they think, okay, we're going to risk 2% of 100,000, that we're only going to be buying, $2,000 of the stock in this example. No, you're going to be buying $44,414.46 worth of stock. All right, and if it gets stopped out at a loss, you're going to lose, though, the 2%. Now, in this case, the loss is 1,994.45 because one share more would put it over 2,000. So 353 shares would be the appropriate amount to buy, okay, on this price bar when it went over. Okay, any questions on that? So that is specifically how to use that in a nutshell. Now that's trade size. So the next thing that the risk to reward calculator does is, let's say you think the stock is going to 170. Okay, we'll just choose that. Let's say you did Elliott wave or whatever. So then you come down to the calculator here, okay, and note that it's asking you for a target price. Okay, all right, so in this case, you put the 170 in here. If that's where you think the market is going and that's your target, you put 170, okay? And now as soon as you enter that in, look what happened. It told you the risk to reward ratio is 7.82 in your favor, okay? So the distance of the pyramid stop, here, let me just go ahead and go into that a little bit more. Let me open this up again. So I think we used, well, I can't remember which one we used. I think we used this one here, okay, for the example. All right, so on this one here, okay, all right, the distance, the raw distance here is your risk. So when we look for risk to reward, we want to have at least two of those as in our favor for the target, right? So if the target's up here, you want to be able to say, okay, I'm going to take this trade, and if it pays off, I'm going to make twice as much as the risk, because the risk was 2,000 bucks roughly. All right, and that is what the trade size calculator in this example is telling you, because it's telling you actually it's more than two. You actually got 7.82. So that would be a phenomenal trade to take. All right, so that works out pretty good, and the profit it tells you in the risk to reward calculator is $15,595.54. Yet really our trade dollar risk is $1,994.45, because that's what it would be if we were stopped out. So that number is 7.82 times the dollar risk, the profit. So that is the beauty of the risk to reward calculator. It's so simple to use. We use it even when we day trade, okay? You can use it for futures. You just got to know the point value to put into the calculator, all right? And it's that simple. So that's an important thing for everybody to master, and learn how to do it well, because you need to be using risk control in each and every trade, okay? All right, so Jim, we'll make sure we resend you the risk to reward calculator thing, okay? Now, also too, sometimes some people are using the trade size calculator. Now, the trade size calculator does everything the risk to reward calculator does except for your risk to reward, okay? This is missing on the trade size. So the trade size calculator gives you your trade size, but not your risk to reward. So if you want to upgrade to the risk to reward calculator, we have an upgrade price. It's not expensive, all right, in the shopping cart where you can upgrade that. And the risk to reward calculator does everything the trade size calculator does again, plus calculates your risk to reward when you enter your target in, okay? All right, any questions on that? Any questions? Let's take a look at the futures market. Let's just do one for the futures market for fun, all right, just so you can see how it can work on that. So let's take a look, let's take a look at this current pyramid here, okay? So let's say you had a pyramid trading point here, and we want to use the calculator on the futures market. So this is the micro NQ, micro NQ. So that means it's the NASDAQ micros. Now, if it was just the NQ, the point value is $20. But on the MNQ, it's $2. So now we have to set the calculator up to use on that. So what we're going to come down here and do right away, see where it says stock, futures, and forex? Hit the futures. Check the futures button. All right, that's the first thing you do. Then erase the values, if there are any in there, that you had before, okay? Just take those out. All right, now, first thing we got to do is change the point value. So on the point value for the NASDAQ, it is $2, okay? Margin, what's the margin for the NASDAQ? For this example, you can even make one up if you want. Let's just say it's 440 or something like that, okay? So the $100,000 account stays the same, the risk is 2%, and there we have the variables. Now we do the exact same thing we did with stocks. First thing we do is get the data window, and we find out what the point of the apex high was. So let's say, you know, we don't see all this activity over here. It's here and it hasn't taken out the top yet. So this would be either yellow for the default, or you could change the color like we did to blue. All right, so let's say we're getting ready to take this trade. So the high here on this is going to be 15906.25, okay? So we put the price bar, put the mouse over the price bar that represents the point or tip of that pyramid, okay? And that gives us a high of 15906.5, right? Okay, so now, what's one tick? For those of you that trade futures, what's one tick over that high? What's one tick over that high? So 15906.5, right? Okay, 15906.75. So that's going to be our entry, right? Okay, now let's take a look at where our stop's going to be. So we put it on the price bar that represents the flat part of the triangle on the right side, okay? So that low there, that exit, is going to be 15,895, and the low of the price bar is 0.25, so one tick under is a quarter, and it'll be even, okay? Now let's bring back the trade size calculator and put the prices in here. So the entry price on this is 15906.75, right? And the exit price is 15895.00. All right, and always double check your numbers and make sure you're using a point instead of a comma where appropriate, or else you won't get the correct readings. It'll come back with an error. Okay, so 15906.75, and we got 15. Okay, so let's hit calculate. And for a $100,000 account on the E-mini, it's telling us we can trade a maximum of 85 contracts, right? Okay, contracts. And if this trade fails, in other words, if the trade goes up and then came down and we got stopped out, we would lose $1,997.50, okay? So that's pretty dramatic. And again, same thing as if you put in a target price. Let's say we thought it was going to 16,000.00. Oops. Let me get rid of that. All right, so if we thought it was going there and we hit calculate, okay, that's what your amount would be, okay? All right, so that's kind of the deal here, all right? If it goes under 2, you don't trade it, okay? That's part of the formula. All right, so any questions on that? All right, because that takes us pretty much to the end of the hour, but I did want to recap that because I think that's really important for everybody to know how to do that and how to use those calculators, because they really make your life a lot simpler. You know, we trade the 1 minute time frame, and you know, using that calculator makes it really simple. And you can open up more than one calculator at a time. You can open up 2, 3. So if you're trading a bunch of futures markets, let's say you're trading 7 futures markets. If you wanted to, before you start the trading day, you can open up the trade size calculator 7 times and have each calculator for each individual market. You could have a calculator for the gold market, for the E-mini, for the NASDAQ, etc., and have them all ready to go, so you technically wouldn't have to change numbers all the time. All right, so that's the way it's set up to do. All right, so that's it for today. This is recorded, and of course we'll put the recording in our normal area. And again, I wish everybody a really happy holiday. Great to have you all here. Good turnout today, by the way. Excellent. All right, any last minute questions? Going once, going twice. I think we look pretty good. Oh, UNG, okay. I think we looked at that one already. Yep. I think you put that up there, Jim, when I asked for an example, right? Okay. All right, anybody else? All right, so remember, on risk reward calculator or trade size calculator, it's your entry price and your exit price need to be known in order to figure out what the proper trade size is. So that's really important. All right, my pleasure, everybody. Thank you so much. All right, so we'll see you next week. And you guys have a great one. Okay, bye-bye.